Hey everybody, Sive Morten here with the Forex Peace Army.com as usual with the daily update on the gold market. So yesterday we discussed some tricky moments on the gold market, mostly just based on this recent collapse that makes us feel uncomfortable, especially when we're talking about taking long positions and so on. Also, some geopolitical risks stands around. So we know about the meeting in Alaska, and recently it was the CPI report data that actually brought some interesting results. We will discuss this in the weekly report as usual. And it's a bit difficult to actually make the decision in a situation if you do not take a look at some nuances that stand on the lower time frames. But at least on the daily chart, we've got the one thing that we mentioned yesterday and said that without this, it would be better to not think about taking long position by far on the gold market. And you could see that this is bullish grabber, so it has been formed recently. Today, if market return right back up and close somewhere near the top of the session, we could get another one. You could see that the biomesity trend right now stands bearish, but this unconfirmed trend, market is not closed yet in this session. If it will be a minor upward continuation here, market close above this area, and somewhere closer to the top of the session, trend turns bullish again, and you will get another bullish grabber on the daily chart. Both patterns suggest taking out of this top. But you could understand that, and probably understand that in general, if market erases such a sell-off, it's definitely will not stop right at the point where it started. So that will be extension. Probably it will be in the way of some ABCD pattern. Also, you could here recognize maybe minor butterflies start forming here with the upward extension. So anyway, all this stuff will lead us back to the idea of the weekly pennant, right? And its potential breakout. That's what we should keep in mind for now, every time when you're dealing with the gold market and trying to make the plans and assess the possible targets that market could reach, what patterns might be formed. So currently we have the multiple butterflies. First one stands on the daily. Right here, big butterfly. So another one stands on the forward time frame chart. This minor butterfly, but another one is even smaller, could be formed here as well. So this always happens when the market shows the narrowing swings in some consolidation. It's now in our case, this is the triangle. So that was about the daily. If you take a look at the full time frame chart, you could see that market dropped to the 50% support at 337. So the breakout to the downside that we discussed yesterday has happened. So if you remember, yesterday we talked about minor pennant here and said that it's forming the bearish dynamic pressure that suggests the possible downside breakout. And that breakout, as you can see, is done. But the most important thing stands with the way how this breakout has happened. Let's take a look at the hourly chart, what we've got. That was our former pennant. If you remember, I will just show you this line. Somehow it's in yellow. We need its blue and probably a bit thinner, right? If you remember, that was here when we talked about, so take a look, trend is bullish, pennant, the market is not actually bullish, be prepared for a drop, and has happened precisely on the CPI report. For now, take a look at the nuances, as I said, important. So how this reaction was drop and immediate upward return. So that was just some grabbing of the stops that have been placed here. Very short-term reaction in minimum target of the dynamic pressure has been reached. So market just not keep going lower. It's taken out of the lows and return it back up. This is what dynamic pressure did and does usually. And with this overall shape, you could recognize small shape, something like the hand and shoulders pattern is forming. And in such circumstances, taking all things together, grabber on a daily, the way how market reacts on recent data, how it performs here, forming this pattern, I think that it's worth it to consider possible taking long position. Stops will be below the lows. Besides, this combination gives us really good risk-reward ratio, very small risk on the hourly chart, just below this area. Maybe even you could try to tighten closer, but that will be a bit more risk that you could be vanished on some volatility or some data report or something. So obviously here we get some minor pattern, and we could try to base the trade on particular this pattern. So that's besides, just don't forget about this. as we talked about this in euro currency video today, take a look at the performance of other markets. Take a look at Forex, euro currency, Great British pound, dollar index. Everywhere you could see the weakness of the dollar. So everywhere euro currency is rising, Great British pound is rising. So it's some common performance here. And the gold just is trying to join it, but it still stands in the point where just yet to be started. From that standpoint of view, and taking into consideration potential risk, I think that's at least it's worth it to think about it. If you're not sure, just think. I provide you all the background that I see. Make the decision. So that's all for now. See you tomorrow.